Today is March 29, 12:31 a.m., and we saw some unusual options on United Airlines. That's UAL. So we wanted to share that with everybody and then also share our trade because the unusual options we saw requires a lot of buying power. And so we have a trade that does not require that and has less risk involved. Because as you can see here, United has dropped and significantly, sort of like the drop here in December, hits a bottom here as support and then bounces up dramatically higher. And so is this going to repeat? Because you see the support here. Is this going to go up dramatically higher and repeat what's happened back here? And so that's something to keep in mind. However, it could just end up dropping back down and hitting support here. So that's quite possible because of this strong support level here at the beginning of the year. So in order to minimize that risk, we're going to share one of the strategies that we are using for this unusual options trade. So without further ado, let's take a look at the unusual options we saw today. So here is the options tape, and here you'll see at 11:42 and 11:40 and then 11:41, these are all the same trade. This was just 1 hour, less than 1 hour ago, right? So make sure you subscribe and hit the bell icon so you get notified whenever we see these options, because these things come and go really fast. And you'll see here it was just placed less than an hour ago. Okay, so the opportunity is right now. There's all these contracts, and you'll notice these are the same strike prices. They're selling the 38 puts and buying the 45 calls. And so if we were to total up this amount, there's 5,999, 1,334, and 1,000 of that is 8,333. And so in order to sell these 38 strike puts, you need to buy 100 shares. So you need to have enough buying power to do that. That's 38 times 100, $3,800. And so you multiply that by 3,800 times the 83,000 shares. That requires $31.6 million. So this trade was also just sort of the same amount of buying power as our Delta trade. We just made a video on that as well, so make sure to watch that if you haven't. It seems like the airlines are taking off these soon by May. So that's the trade, and you'll see here if we look at that trade, it's right here. Oh, let's take that off. This is the trade. So selling the 38 puts and buying the 45 calls, and it's a bullish trade. So you'll see it profits as the price moves from 43 upwards. The profit loss, anything above this zero line is profits. So this is all going to be a positive profit. And so they reduce their risk by having a cap here. So I think they'll cut their losses when it's about around this range. They'll cut their losses, because as you go lower down, this is going to be a lot of loss, going down to the thousands per contract. So the way we are doing this is our trade. It's a back ratio. So you'll see here on our back ratio, we are selling the 45. Instead of buying that 45 call, we're going to sell it and then buy 250 calls. And that's going to allow us to also be bullish. And then if it does drop and crash down, we don't have a loss. In fact, we will have a gain of $68 towards expiration date because it's actually a credit. So be careful with this though. If it is hovering around this 50 price range, this is called the valley of death, where as time goes on, you will start having a negative theta decay that will bring you to a negative. So this trade has to be very bullish by expiration date. It has to break 55, 54 to be profitable. But we will be adjusting this trade as we monitor it and see whether or not this is going to go and rally up. If it isn't giving us that strength, we will cut our trade off because it is has that potential of a negative theta trade. However, if it does drop down, we don't have anything to worry about in price because we will actually make money from it. So if you look at the options chain here, this was the trade they put on where they sold the 38s. You'll see the large volume here, and then they bought the 45 call strikes here. You'll see also the volume here, and you'll see our position is actually selling it. So when there's these large institutions are buying it and pushing up the prices, we'd rather be a seller and sell it, so to get a better premium for that. And then we bought the 50 strikes here. You'll see here, that's our position, and make sure you get 2 of these if you want to do this type of trade, because it's a ratio of 1 to 2. Okay, so this is all going to be dependent on whether or not United is going to just take off and fly up, breaking that 50, that level here, this 50 call strike, and the speed at which it breaks is very important because this is has a negative theta trade. It starts to become more negative as the trade is around this range. Okay, this is more of the negative theta range. So as long as we can get out of that, or we can fall below that, it's not very impacted by theta, and so we're pretty safe there. So as the price gets around here, you want to monitor the speed at which it's moving. If it's starting to consolidate, you may want to get out of it. If it's not showing that strong bullish momentum, which these options are telling us today, lots of bullishness in the airline industry, as I mentioned, with our also unusual options, that activity we saw on Delta. So make sure to watch that video. We'll put that link at the description and also on the top right corner of this video. All right, thank you. Like this video if you found value, and subscribe and hit the bell icon when you want to see unusual options as soon as possible. Take care.